The significant increase in construction company failures since the start of the year shows no signs of slowing down, with Provisional's data indicating that construction insolvencies increased 19% in the month of May, sitting at around 43% higher than May 2021. Today, we're going to have a look at the headwinds, and it's not what you think. Let's have a look at what's going on, especially with Australia's biggest player. Looking at Metricon, they've actually recently come out sacking 225 employees with a national restructure. Now, we saw Metricon recently selling a bunch of their display homes, saying there's nothing to see here. And we're seeing more data, which is starting to make a little bit of a worry in the industry, particularly if we've seen so many construction companies go under. Giant and construction giant Metricon unceremoniously sacked the majority of its New South Wales staff via Microsoft Teams on Monday, in the latest sign that the struggling company is teetering on collapse. The company letter confirmed that 9%, about 225 staff members out of a 2,500 strong national workforce would be let go in the restructure. And we saw it worst hit in New South Wales, where David Shorten, Metricon's New South Wales state manager, informed staff on Monday morning that effectively the numbers would be cut to just 18 in the team from a team of 60 currently. So with redundancies to come out, we are seeing there's a company letter and a statement that they released here. One employee who wanted to be unidentified said that there's been a bunch of turnover recently with people abandoning ship to go to competitors. And those that stayed basically feel like they've had the rug pulled out from under them through no fault of their own, because they believed the company's repeated public denials that there was no financial difficulties that they're facing. Now, this is off the back of the CEO when he announced 65 display homes that were for sale, advising that it was a normal part of the company's cycle to let it go. What we did see was, as I said, 60 display homes put on sale for a total of 65 million. Metricon confirmed that the internal process of restructuring would increase their focus on delivering 6,000 homes that are due to be constructed this year. Now, that's a mammoth amount of homes that are being built. We've seen some builders go under and leave a devastating aftermath after the fact. And 6,000 homes is just such a huge, significant number that Metricon might almost be too big to fail. What do you guys think? Leave a comment below, because we're definitely seeing a lot of worrying signs come out of Metricon in recent times and what's been happening. Now, we did see in May reports emerge that Australia's biggest builder were on the verge of financial ruin, as the company claimed that they were facing serious financial problems. Now, the CEO and acting CEO, Peter Langerfield, shot down those allegations, and effectively we saw an injection of $30 million in the business back then to keep it surviving. We saw company representatives meeting up with the Victorian government in crisis talks, and also a restructuring deal with the Commonwealth Bank. So we saw a lot of things happen back then. We have seen a bunch of builders go under recently. We've seen Condev, Gold Coast-based building company. We saw ProBuild went into liquidation in recent months, and they were large builders. We also saw some smaller builders, Hontono Homes in Hobart, Home Innovation Builders in Perth, and New Sensations Homes, as well as Next, which is a Sydney-based firm, all leaving a bunch of unfinished houses there. We saw our story with Donna Taylor recently, having been in a very similar situation where her builder went broke. And overall, we've seen construction insolvencies rise 30% in the last 12 months. And that's according to Equifax. That's a significant number, and that's almost too high. We saw that the builders had a massive influx of applications come through with the home build grant, which definitely increased the number of builds. And at the moment, we're starting to see confidence weakening in the construction industry. New orders for construction have fell in July to their lowest level in almost a year. We saw that Metricon in particular expanded rapidly off the government's home builder grant scheme. So if you remember that, that was a scheme that effectively gave a bunch of cash to anyone looking to build previously back then when COVID first hit as a stimulus measure. Yes, this is a second and third order consequence because that stimulus program plus other state government programs meant that there was a dwelling commencement surge for Metricon where they had a 33% increase in demand. Now, that's always going to be a difficult thing to handle because previously the way Metricon worked was they would get contracts based on volume. So they'd work on very tiny margins. They, as we can see here, do 6,000 builds a year. And due to their buying power, they'd make the money on the margin. And that all worked really well when you're dealing in volume and you're dealing in a situation where house prices or the nuts and bolts and the building materials didn't change too much. But what we saw was a massive crunch and a surging of material costs, shortening labor shortages, I should say. And that had a very significant impact. And we can see Metricon, where having a massive surge, it's actually been detrimental and they're having massive issues as a result. And we can see that Metricon is Australia's largest builder, building around 6,052 houses. So definitely something to keep in mind. The building sector's peak body earlier, a couple of months ago, called out the Reserve Bank and asked to give the building industry and even borrowers more time between rises to assess the economic impact over the wider economy. We're seeing that having a devastating effect in the building game. And just to go back, we only need to cast our minds back to 2006 in May, the official cash rate was at 1.75%. That unwinding of sorts to give us perspective on how fast things have escalated recently shows that it took almost 4 years to get the cash rate back to 0.1%, 2020 in November. In the last 4 months, we've seen the cash rate go from 0.1 to 0.85. That has had a very significant impact on the builders, on the industry, and people being able to afford lending. We do know Commonwealth Bank, they equated for about 26% of mortgages written overall in 2021. They came out saying that they predicting the cash rate to go in a backwards direction and a bit of the Reserve Bank needing to cut rates and unwinding mid next year. That was the CBA's head Australian economist, Gareth, there, who gave those reports in June, actually, about where they see the rates going. But what we do know at the moment is it certainly is a challenge for those out there. We've had questions from home buyers recently asking, Nathan, is it the right time to buy? I guess there's never a right time to buy. I think it's got to come down to your own individual position, understanding your affordability, factoring in rate rises and what could happen. Here at Hunter Galloway, that's something we specialize in. So if you're not sure, you're wanting a bit of guidance, hit us up at Hunter Galloway. We're mortgage brokers. We're based in Australia, deal with people Australia-wide. So if you're wanting to understand your affordability, where the market's going, is it the right time to buy? Hit us up at huntergalloway.com.au, fill in the contact form, something that we can definitely have a chat with you about, or visit us or call us on 1300 088 065. Definitely happy to have a chat. Certainly a lot going on in the market at the moment. It's looking like there will be another rate rise in September and then potentially another 1 or 2 in October, November. So definitely going to continue in an upwards trajectory with rates. Guys, thanks for today. Leave a comment below. We'd love to know what you think. Have you started a build? Are you in the middle of a build? Are you finding that you're having difficulties? Or is this just all a little bit of hot air and you don't see any issues happening in what you're seeing on a suburb by suburb, state by state level? We'll see you again next time, guys. And thanks again. Have a great day.